I'm going to show you how to make consistent profits every day, week, month, and year. This is for beginners, for more experienced people. I'm going to show you exactly what to do step by step. So the first thing is you want to find an underlying. We've got XLU here. You want to find an underlying that's kind of in and around its 52-week high area. So in other words, that means you want to find an underlying that's trading around the highest point that it's traded over the past year, and then we're going to have the small directional assumption that price is going to mean revert a little bit and come lower. Price doesn't actually need to come lower for us to make money, and I'm going to show you why in just a second. But once you have found something, you also want to then make sure that the IV rank of that particular underlying is over 30, and you also want to make sure that there are no earnings events for that underlying over the next 45 days or so. This is an ETF, so we don't need to worry about earnings events. And once you've ticked those things off the list, you want to pull up a list of option expiration dates for that particular underlying, because we are going to be writing options contracts, and that's one of the reasons, or that's one of the ways that we are going to be able to build a very high probability setup. Now, once you're looking at this list, you want to pick an expiration date that has about 30 to 60 days left on the contract, and you also want it to be a monthly expiration date, not a weekly or quarterly expiration date. So there's only really one here, April 17th, 30 days out. The next one is 94, which is too far for us. So we're going to open up the April 17th, and now we can see the options chain here. We have calls on the left, puts on the right. We have this orange horizontal line. This shows us where the price of the underlying is with respect to these strikes going down the middle. We can also see our expected move visually represented with this vertical orange bar here. Okay, now what we want to do is we want to make the small directional assumption that price will mean revert. However, we don't want to make this a pure directional play. Even if price does go a little bit higher or stays sideways, we want to still make sure that we can make money. So what we're going to do is we're going to come over to the call side, and we are going to look for a strike that has about a 25 to 30 delta. Okay, so we're going to have a look at this 34 delta strike here at the $80 mark, and we're going to sell that. Okay, so we're going to sell the 80 strike, and what this basically means is that we want price to stay away from $80. So right now it's price of XLU is 78.36. So as long as price stays below 80, we're going to be able to make a lot of money on this position, or pretty much we'll be able to keep all of the premium that we collect up front. So if price goes down, we make money. If price stays where it is, we make money. If price goes up a little bit, but not higher than $80, we're also going to make money. So this is why it's a slight directional play, not a pure directional play. Okay, now what's our chance of making money on this trade? Well, if you look in the bottom left, we have a pop of 72%. That means we're going to make money 72% of the time, and we also have a P50 of 84%. So your pop is if you hold till expiration, and your P50 is your probability of profit if you get out 50% of max profit. So which is personally what I do, and we've got an 84% chance of being able to do that. Okay, so in this instance we would collect $83 up front, and our broker is going to require 1.4k in buying power to open this position. Now if we left this trade naked how it is, nothing covering this short contract, then as you can see, this isn't the greatest return on capital. For a naked position, we want to be targeting at least 10%. This is clearly under 10%. And you may also not want to allocate 1.4k to one position if you're a newer trader or if you have a smaller account. So I'm going to show you what to do to reduce this buying power requirement. So what we're going to do is we're going to come a little bit further out, and we're going to buy another contract to cover our short contract. So let's just say if we go $5 out, so we go to the 85 strike and we buy that, what that's going to do is it's going to limit our loss potential. So now we're going to collect $75. We're going to collect less because we've had to pay a little bit for this long contract. So we're going to collect 75, and now our broker is going to require just $425. So as you can see, we've massively increased our return on capital, we've reduced our buying power requirement, and our probabilities of success have reduced slightly. That's the trade-off of a higher return on capital. However, they are still very high. We still have a P50 of 80%, which is perfect for us. And this is basically just what you want to do over and over again. You want to have as many occurrences as possible, and you want to make sure that you are sizing your positions accordingly, because you don't want to get stung by any short-term variance. Okay, so in order to make sure you don't get stung, we have created a free position sizing template. And so the link for this is in the description. It's free for everybody to use. And the way it works is you enter in the size of your portfolio at the top. So say if it was $50,000, and then you can then enter in whatever the VIX level is. So say if it's 21.9. And then as you can see, everything is going to be calculated for you. All you need to do is use this information to form the backbone of your portfolio. It's going to tell you the maximum amounts that you should be allocating to your positions, depending on where the VIX is, what the size of your account is, and obviously what type of position you're looking to trade. If you would like to learn in more detail about what we do, how we do it, click on EDS Premium. The link for this will be in the description as well. Get yourself signed up. You will have access to one of our portfolios that will allow you to see all of the positions that we place, how we manage risk, how we make adjustments, everything in real time. There's also a full course, so no prior knowledge is required. We will teach you everything that you need to know. It's a private community, so if you get stuck, you can speak with myself or with other like-minded individuals. And there's also a 100% money-back guarantee. So after 6 months, assuming you've been through the course and followed some of our trades, if you're not profitable, then we'll work with you for free until you are, or you can request a full refund. So it's completely risk-free. It's $9.99 a month to join. And the aim of EDS Premium is we want to teach you the skill. Once you've learned it, no one can take it from you, and we aim to get you to that point of where you are self-sufficient within 6 to 12 months. So with that being said, I will see you guys on the inside.